This is your LMAX exchange technical update for Monday, February 13th, 2017. Euro dollar. So the euro has been under pressure over the past several sessions, but if the market can hold above 106 on a daily close basis, then this will keep the pressure on the top side with the possibility for a fresh upside extension back towards recent highs that we saw just over 108 at 108.30 and towards that 108.75 December peak. If, however, we close back below 106, this will put the immediate pressure back on the downside and the focus on a retest of the recent 14-year low from earlier in January at 103.41. Sterling dollar. So cable has been locked in a consolidation over the past several sessions after the market recently stalled out just shy of critical resistance at 27.75 in the form of its December peak. At this point, we're going to need to see a break above 27.75 or back below recent support, which was seen around 23.47 for clear directional insight. But overall, the downside pressure while the market holds below 127.75 remains intact, and there is risk still for a potential resumption of declines back down towards the recent multi-year base, that plus 30-year low from October of 2016 at 118.41. Dollar yen. So dollar yen has seen a nice little bounce in recent trade, but overall the pressure still remains on the downside while the market holds below recent resistance from the 19th of January around 115.62. At this point, consider the possibility for a lower top ahead of the next major downside extension below the recent support that we saw in the 111.60 area and towards a measured move downside extension to 109.50 further down. Euro Swiss. So Euro Swiss has seen a bounce in recent trade, but overall here the pressure clearly remains on the downside with the market stalling just shy of the 2016 base at 106.24, but expected to retest and potentially break that level over the coming sessions. A break below 106.24 will expose psychological barriers at 105 further down, while any rallies now should be very well capped ahead of 107.60. Aussie dollar. So Aussie has recently rallied up towards 77, stalling just shy at 76.97 thus far, but there's a lot of medium-term resistance up towards 78, and so additional rallies should be well capped in favor of a bearish resumption. Again, on a medium-term basis, there's a lot of resistance up towards 78, and we've seen a nice rally in 2017, so this market could be poised for some form of a top in the sessions ahead. A break back below recent support that was seen in the 76 area would be required to confirm or strengthen this outlook and accelerate declines. Dollar CAD. So dollar CAD has seen setbacks in recent trade just below 130, but the market has been unable to establish a close below that psychological barrier at 130, and so there is risk now for fresh upside over the coming sessions. The market will need to, however, establish back above 32.13 recent high to strengthen this outlook and accelerate gains. Kiwi dollar. So the New Zealand dollar has seen a nice top over the past week after the market stalled out ahead of 74 at 73.76, and there is scope now for additional declines in the sessions ahead back down towards next key support, which comes in around the 68.60 area. At this point, only a break back above that recent high at 73.76 would force a rethink of this bearish bias. SPX 500. So you can see here the S&P 500 continues to push up to fresh record highs and is showing no signs of any setbacks just yet, though daily studies are starting to look stretched again. There is risk now following the break that we saw above 2300 for a push to the 2330, 2340 area before the market considers a reversal, and ultimately it would take a break all the way back down below 2232, that low that we saw on the 30th of December of 2016, to force a shift in the structure. Gold. So gold continues to be very well supported on dips in 2017. The market was most recently supported at 1180 ahead of this fresh breakout above 1220, which now exposes a push towards 1260 in the sessions ahead. At this point, only back below 1180 would compromise the constructive outlook for gold.